Folks, welcome to our How to Listen to Earnings call here at Acumen Learning. We love the opportunity to help people get more comfortable around these quarterly communications we get from our senior leaders. As Stephen described, we do these every single month as a way to continue to build our participants' business and financial acumen. As we get started today, a few kind of quick things I want to share with you. Let's start first of all in the chat box. Make sure your chat box is up and working for you. Make sure it's set to everyone. As you jump in there, just put in where you're calling in from, city, state, or country. Let us know where you're calling in from. Get a feel for who's on. Just make sure those are up and running. This will be our number one way to communicate throughout today. We got a lot of people on these calls. So when you come in, you're set at mute. Maybe as we get towards the end, we may be able to unmute people if you want to converse. But for most of our communication, we'll do it right in the chat box itself. My team and I are all out of kind of just south of Salt Lake City, Utah, here at the base of Mount Timpanogos. So anyways, we're having a great day as we get started here. Second tool that we're using quite a bit is our polling tool. So the first question I'm going to ask, I'll just go ahead and launch that poll, make sure it's working on your side. Is this the first time you've had a chance to attend one of our earnings call webinars? As I said, our company, Acumen Learning, we focus on the topic of business and financial acumen. What we find is senior leaders in some of the best companies in the world, DraftKings included, are very focused on driving more profitability, more cash flow for the outcome for their investors, for their employees, to have a viable company, etc. What we find is employees are functionally brilliant, very good at what you do. You know more about your role than I would ever understand. That being said, we often get so focused on our individual role, we rarely step back and get the big picture perspective. So our goal is we go into companies to help employees understand key strategies, financial metrics and measures, how to read statements, etc. So the outcome is they can take that information, go back to their individual area, and then be able to execute, be able to align their day-in-day activity to the corporate goals and financial metrics. As part of that, as a continued learning experience, every month we choose a different company from a different industry. You can, at the end of this, you can make recommendations. We put these companies as every month a chance for our graduates to come back and practice using the tools they get in the course. Maybe I say to me, Brent, I've never been through one of your programs. That's okay. It's also available for anybody. If I was to give anybody advice around building your credibility in your organization, the more you understand about business, and not just business, your business. And if you're publicly traded or selling into a publicly traded company, take advantage of these quarterly connects with the one framework and two simple tools I'm going to give you today. You'll absolutely be able to get more understanding of your company, your customers, your competitors, whoever you want to look at. Maybe it's just a company you want to invest in. It's a great way to get build your credibility, build your career, and build your company. So with these sessions, it looks like today on the call, it looks like the poll's working fine here. What I see is that, let's see, many of you, it's the first time. So more than 50% of us, it's the first time coming. So good to have you here. And then a number of you brand new. So welcome. Good to have you as we get started today. Here's one last question before I jump into the training here. Here's my question. As we're coming to a call looking at DraftKings, my question is, what, if any, connection do you have to DraftKings? I'm an employee. I'm an investor in DraftKings. I was interested from that perspective. No, you know what, Brent? I'm just kind of interested in this industry. Or for most of us, hey, I no direct connection to DraftKings. I just want to learn more about this company and understand it better. A great way to see who I've got on the call today. So welcome, those three from DraftKings. Good to have you. Investors at DraftKings. Good to have you. Interested in the industry, a number of you there, but most of us, it's not necessarily DraftKings. You're here to kind of build your business and financial acumen credentials. Well, excellent. Well, let me jump in as we get going today. My question that I have for everybody is, when's the last time you listened to an earnings call? I've got a quick poll question on that. You're coming to a course on listening to earnings calls. So when's the last time you had a chance to listen to one? Maybe it was earlier this year. Maybe, you know what, Brent, it's last year. It was last year was the last time I had a chance. It's been a while. Or for some of us, I've never had a chance to listen or review an earnings call. Or I love that last one. I'd rather go to the dentist than to read through these. As we said, they happen on a quarterly basis. It's a chance for the executives of these large corporations, publicly traded companies, to take that opportunity and communicate to the market what's going on from a financial performance, a strategic performance, as well as a bit of where are we going in the company. In addition to that, by the way, it's not always just publicly traded companies. Privately held companies will do like a town hall meeting where you get leaders within your segment of the business or geography. They'll come together and talk about some of the goals, what we're working towards, how we're performing, etc. These are great opportunities to build your business and financial acumen, to get engaged around those experiences. So it looks like many of you have had a chance to listen to it. That's excellent. For those 14 or so that you've never had a chance, my hope today is to inspire you enough to give you the courage to say, you know what, I'm going to give this a try. I promise you, with the tools that I'm going to give you today, in about an hour a quarter, you can absolutely build your capabilities around this and really build confidence around understanding your company. And once you understand your business or the customers you're selling in or the companies you're investing in, it'll help you in making your business decisions. Well, what's interesting about these calls that happen on a quarterly basis, even with these calls, 95% of employees don't understand company strategy. Now, think about you and your role in the company. This is not a stat for you, but the bigger the organization gets, the harder it is for an individual to say, I'm in operations, I'm in HR, I'm in finance and accounting, I'm in product management. How does my day-to-day activity drive to the corporate key strategies or metrics? We're very good at understanding our roles. We might even be good at understanding our segment. But the bigger the organization gets, can you make the cases to your activities how they're driving your company strategy? This is a Harvard business study. They found 95% of employees don't understand company strategy. Here's another stat, kind of a sobering stat. 90% of employees don't understand their company's important business and financial metrics and measures. Now, again, we may have good understanding of operational metrics, but when we get to the corporate, do I understand what EBITDA is? Why is that important? How do I impact it? Free cash flow. What is that? Free cash? I love free cash. Give me some more of that. What is that metric? How should I think of it? How can I drive towards that? Well, imagine you're DraftKings CEO, Mr. Robbins here, and you're running this organization, right? This new opportunity to have gaming, online gaming, opportunities to everything from casino type experiences to betting on sports, all these different opportunities. You have some of those sobering metrics of 95% of employees don't understand your strategy. Potentially 90% of your employees don't understand metrics. Well, you're the CEO of a company incorporated in 2011, digital sports entertainment gaming company. We're all very familiar with them. Since incorporation, company has experienced culminating net losses, net negative cash flows. They say, wait a second. So since 2011, that ability to kind of have a consistent profitability, consistent increase in free cash flow, it's been challenging. Although this most recent quarter, that's great. Q2 was great for them. We'll talk about that in just a moment. As of December 2025, sportbook products, they had in 26 of 31 live U.S. jurisdictions. So basically, the places they could be in, of the 32 in U.S., they have 26, 5,100 employees in 7 countries. Well, the question really is, so you're dealing with this challenge of potentially employees being very good at functional level, but are they seeing the big picture and helping us day in and day out to drive results? What is it that you need your employees to understand? And how would these experiences, whether it's a quarterly call, whether it's a town hall meeting, a team meeting where you walk through, maybe it's an email you're sending to them. What is it you want them to know? Well, what about your customers, right? A big part of DraftKings is the marketing spend they're going after. Why have they not been so profitable? It's not because they're not generating revenue. It's because the cost of acquisition. We're expanding into new markets. It costs, I think they were talking about a state they're coming in. It's tens of millions of dollars. I think it was like 40 million, 30 million to get into a certain state. So a significant amount of money going out to set up the systems, but also to then acquire customers. help them see why they want to be a DraftKings member and be able to game through the DraftKings applications. What does you want your shareholders to know? Obviously, they're publicly traded. Who owns the business? Well, it's the shareholders. What do you want them to understand about your business? Of course, then partnerships. What do you want them to understand? Well, folks, that's what these calls are all about. Being able to communicate to the employees, to customers, to shareholders, to partners, kind of how we performed, what we said we'd do, how we performed, and where we want to go is what you get communicated in these. For the purposes of our how to listen to an earnings call for this month, we're using DraftKings. We're specifically looking at their Q2 2025. For the three of you that are DraftKings members, I can't think of a better time, and the investors, a better time to come and be a part of this. Because here in about a month or so, you're going to get your Q3 information and see, okay, I see what happened in Q2. Now can I take these tools and engage around Q3? I promise you, 2 to 3 times consecutively, it's absolutely going to set you apart. So we're going to look at the Q2 information that came out August 6th and use the tools to review DraftKings information. Now, folks, for everybody's on the call today, here's my guarantee to you. It's a guarantee. I'm really going to give you a guarantee today. It's not one of those fake guarantees. This is legit. I've been doing this for 15 years, working with some of the best companies in the world. They can come to our program, and I got to be honest, and it's not a prideful thing. They love our programs. I wish I could say it's because of me. I wish I could say it's because I'm brilliant and all these. No, it's because this is a topic that so many employees recognize. I've got a great functional understanding. But as I move throughout my career, being able to understand what are these key metrics? Why are they important? How can I execute around them? That's the differentiator. And what we find is it's not the course that moves the needle. That's the start. Think of the course as like a boot camp, where it's our online self-paced all the way to our multi-day programs. That gives you a lot of information. Your greatest value is to take these tools and use them the next 2 or 3 quarters. In my experience, over 15 years, thousands of people I personally have trained, and tens of thousands our company have changed. Those people who take these tools and use these 2 to 3 quarters consecutively, they build their credibility. I literally have employees talk about the credibility where people are listening to. I've had HR leaders, for example, saying, I finally got a seat at the table. They're listening to me because I can speak the language of our financial metrics and measure. Build their career. I remember one individual saying, I specifically got a promotion because my consistent review of this, I was able to speak the big picture of what we're trying to do and then articulate how our segment, marketing, sales, operation, can drive results. And the outcome, if every employee is engaged around these on a quarterly basis, then you're taking not just your functional expertise, you're taking the global focus of the company and distilling it down to my role. And as you do that, it absolutely builds the company's success. So that's my guarantee. So the next 40 minutes or so, my goal is to inspire you enough to say, you know what? I'm going to do this. I'm going to take this gray-haired guy for what he's saying, and I'm going to take the time and engage around this. So I'm going to give you 3 things. I'm going to give you a simple framework, a process, and tools. That's all I'm going to give you, okay? So first of all, the process. The process is a 3-step process. You got to prepare for these calls. You got to analyze them. And most important by far is right here, you got to actually apply. Do something with it. That's what you got to do. And we have a whole tool that will walk you through that process. So let's start with the prepare phase. What do I mean by prepare? When you look at prepare, first of all, for those that are new, what are these calls? They happen on a quarterly basis. Most, like 99.9% of publicly traded companies will do these earnings calls. There are a few, like for example, when a company is first in startup mode, they have to do the reporting, but they may not hold a call yet. But majority of companies will hold these calls. They're anywhere from a short one would be like 45 minutes. A long one would be like an hour and a half, okay? Most of them by far are in that kind of 45 minutes to an hour length. That's what you're looking at. The first half of it usually is these prepared remarks. Now, what is that? This is where senior leaders, Mr. Robbins and their CFO, Mr. Ellens, get on the call and they communicate. Their purpose is to kind of give their pitch. They're going to communicate, here's what we said we were doing. Let me tell you how we performed, and then let me tell you where you're going to go. From there, then you get a Q&A. Now, folks, for 99.9% of these calls, the Q&A is not for an individual investor. It's not for employees. On a town hall meeting, you might do that. But when we do these earnings calls, it's actually analysts, those that are tracking the stock. So companies like Wells Fargo, Barclays, these major investment firms, they have analysts that are tracking the stock. Now, their whole goal is to get as much information so they can write a report. They're going to tell their companies basically what to do with the stock. Now, there's actually 5 levels of what they recommend. The 3 most common you'd be familiar with is buy, hold, or sell. They're going to make some communication. So those individuals are going to try and clarify the prepared remarks. It's often about, 15 to 30 minutes on prepared remarks, and then the rest of the time is going to be Q&A. Now, this one with DraftKings, it was quite short, very short on the front end. Like I would say less than 15 minutes, if I remember correctly. A lot of time was given to the analyst to be able to ask questions. So in this first phase of prepare, what do we need to do? The first thing you've got to do is you got to locate the call. And let me quickly just show you how to do this. We're all familiar with this wonderful website. It's called Google, right? Let me jump over there, give it a blank. Come to Google or whatever your favorite web browser is. And all you're going to do is start typing in what you're looking for. So because I've been doing it, it's already starting to pull stuff up. But I just start typing in DraftKings, investor relations. I actually want to be more specific. I'm going to say Q2. That's already doing it. Q2, 2025 earnings. Boom. I click that. Now, with all this new AI stuff, Gemini is here at Google. It's going to start walking you through. You want a nice little summary? Folks, it's getting better and better. If you're interested, reach out to me online. I'll show you how to use some queries to make this even more robust. We don't have time to do that today. But right here, I see quarterly results. I could come down here to investor relations, but I know what I want. I want the quarterly call. So I'm clicking right there. Folks, it's that easy. I'm here. Right here. Now, if it's prior to the call, once they've announced it, they would have a little Q3 here, and you can actually register for the call. Now, register, don't worry, they're not selling your information. All it is gives you access to be able to jump on the call. Now, when you jump on the call, it's not like they're saying, hey, Brent, what do you think about this? They're not talking to the listeners. The only people they're communicating with is to the analyst. So all it is it gives you access to it. Now, once the call has happened, usually within about 24 hours of that call, you're going to have a bunch of information available. And DraftKings does a great job of providing it. So for example, here's Q2. By the way, just so you see, if you want to see what happened in Q1, you can see it right there. Here's full year of 2024. You can go back and see prior years. It's all available to you. Well, you click right here, and it's going to give you some information. The call's already happened. It happened back in August. Couple things that you'll click on right here. It's a press release. Now, I love the press release because it gives me a little summary of what they might have said in the earnings call. So press release is a great resource for you to look at. Let me go back. What other things? A business update. So this is literally a letter from their CEO to shareholders. You often don't get this on a quarterly. You get it on an annual, but this is from their senior leaders communicating. Let me give you kind of an overview of how we perform. And their CEO, CFO providing that. Great information there. In addition to that, though, you're going to have your financial statement. So right here, they're going to give you all that financial data, which is great. Presentation. Now, folks, I love the presentations because in just a couple slides, you can get their focus. Look here, their core slides were 3 slides. If I'm an employee, if I'm an investor, these are going to be the best slides to give me a quick summary of what was communicated in the call. Now, the last thing I'm typically looking for is going to be a transcript. They didn't give us a transcript. There's different websites. In fact, I'll show you real quick since I have it open. Seeking Alpha right here. So Seeking Alpha, Motley Fool, if you're familiar with that. There's MSNBC has this resource where basically you go in, you type in any company you want to look at. Obviously, I got DraftKings open, and it's going to give you the transcript. So here's the transcript, word for word, what was communicated. Now imagine downloading that and reading that and getting good information. Or once you're really comfortable with this, throw it into a ChatGPT, Gemini, whatever your favorite AI, asking specific questions to kind of help you distill the key information. Great resource available, usually within 24 hours. And all you'd have to do, type in DraftKings Q2 2025 transcript, earnings call transcript, and it'll take you to one of those websites. You can download it. Probably more information than you ever want to know. Last thing I'll share with you because it's there. This is their quarterly communication to the market. The value for this for you as an employee, as an investor, et cetera, is it's one thing to look at the numbers in their quarterly reports, the Q, 10Q, or on an annual basis called the 10K, they're going to give you a lot more detail about what happened. So you'll see it has the financial statements as a kickoff, but then it kind of walks through what actually happened. What actually happened within the quarter. So here's what happened around intangible assets. What happened with some of their borrowings, indirect taxes, etc., are all available there. Well, folks, probably more than you ever want to know. The base thing you want to look for is do that Google search. When you do the Google search, all you're looking for is to get access either to the call so you can listen to it, or once the call has happened, be able to access the financials and or the transcript. Those will be great resources for you. Well, if it's prior to the call, of course, you don't have that transcript. You're going to review your notes. You might say to me, well, Brent, what do I mean by that? Well, once you've done it a couple times, you generate your own notes. That being said, you can also go back to a prior quarter and review it and kind of assess what's being communicated. What you're trying to do is the most value you get from these calls is multiple quarters. You can kind of see if what they said they were going to do actually happening, what's trending as they kind of move forward. In addition to that, one of the last things I often recommend is go ahead and meet with your team. If you got a team, bring them together. I can't think of a better thing. If I'm a product manager or something like that, and I have a few employees, bring them together on a quarterly basis, do it together. And at the end, you walk away with what are the key things we can do within our kind of circle of responsibility to drive the results our executives are talking about. So that's the prepare phase. You got to locate it, review your notes, and then get ready to meet with your team to go through it. Now, the majority of the work is going to be in the analyze phase. And this is where I'm going to give you the framework, and I'll give you the 2 tools. Now, the framework, everybody open your chat box. All my graduates, if you open your chat box, we're going to quickly walk through the 5-driver model. This is a simple framework. If you come to our programs, if you're engaged in any of our programs, self-paced online, face-to-face, virtual programs we might do, you're going to get this framework. Now, whether you're a multi-billion-dollar DraftKings or a small little street vendor business, these are the 5 fundamental drivers every company focuses on. Now, how's that valuable for us as we listen to these calls? Rather than you having to try and take a bunch of information and synthesize it on your own, having a simple framework or mental model will absolutely help you from an execution perspective. So what I want to do is just quickly review this with you. And I got a few questions for those that have been in the program just to help us. We talk about cash. We talk about the importance of cash. When you think about cash in a business, it's vitally important. DraftKings talks a lot about it. Why is cash important? Well, a simple phrase to always remember is cash is blank. Fill in the blank for me. What are we talking about when we say cash is king? Now, it's not always just king. It could be queen. What else is cash for a business? Some will say it's the lifeblood of a business. Some will say cash is the oxygen source of a business. In the end, if a company runs out of cash, they die. Yeah, Paulie's saying it's liquid or liquidity. Yeah, it's the heart rate. Thank you. Having cash available, especially as you're looking at DraftKings, where you're kind of building this company, right? And you got a lot of dollars going out to acquire new customers. You might not be profitable for a number of periods because you're got more going out than's coming in. Well, if that's the case, just think about it in your personal life. If you have more going out than you have coming in, how long can you keep maintaining that without cash? Now they're generating cash. They're asking they actually have investors that are going public generates cash, but cash becomes vitally important to drive future growth and opportunity within the business. When you talk about profitability, there's 2 fundamental levers we talk about around profitability. You've got to increase one thing. If I want to grow profit in a business, I've got to increase one thing or decrease another. What are my levers? Let's just quickly, this is what I call business 101. When you think about levers of business, 2 fundamental levers impact every one of the others. If I want to grow my profit, what do I have to do? Increase what? Our revenue, thank you, Miguel, or reduce my costs. So increasing my revenue, what they call net revenue at DraftKings, anything I can do to increase my revenue, by the way, revenue is also known as sales, as well as reduce my costs. Anything I can do to increase revenue, reduce costs will drive. Well, folks, those 2 things will eventually absolutely drive cash flow. They also impact profitability. They impact all of your return on calculations from an asset perspective. And more often than not, the growth of your profitability and cash flow is what the market's looking for. So very important as you think about profitability. Now, one of the key metrics DraftKings is talking about is they're talking about EBITDA, earnings before interest, taxes, depreciation, amortization. Think of that as their kind of controllable profit. If we want to whittle down how much profit we generate from our core business on the things we can't control, EBITDA is their metric. Where others, it might be operating income or EBIT. I have companies using income before taxes, what we call IBT. So you're trying to find what's the core profit measure the company's looking at that describes how profitable their core business is. Then assets, it's anything you own or control which has value. Think about a company like DraftKings. What would be some of their assets? Put them in my chat box. Think about what is it that they own or control which has value. As you think about DraftKings, technology for sure, Ricky, is going to be a big part of it. Their applications, their platform is absolutely going to be there. That's going to be core. Now, they have cash, right? You go to their balance sheet, you'll see they have cash. They've got maybe facilities, data centers, all this stuff that they have, patents, absolutely, IP. These are all pieces of the pie, right? Anything they own or control which has value is going to go on their balance sheet. The idea is, how much do I kind of hold on for future investment versus how much do I deploy to take advantage of opportunities? That's a balancing act executives are focused on. So me as an individual employee at DraftKings, it's about what do I have access to? I may have access to a budget. I may have access to technology, a team. How do I deploy those to get the greatest return in my profitability, greatest cash flow generation? That's what you're looking at. Of course, growth is what investors expect. Driving growth as a company. And then, of course, people, the center of the model, it's both the internal customers, your colleagues, your peers, and direct reports. How well are we driving towards success? But it's also your external customers, all the various individual members of DraftKings that we are acquiring, that invest their time and effort in our games and betting opportunities is a big part of what they're focused on. Well, with that framework in mind, you can now jump into these two tools as we go to assess the company. So the first tool I want to highlight is called the Executive Alignment Tool. Now, you'll get in the packet. Don't worry. You don't have to take a ton of notes. We'll give you the packet at the end. Here's how it works. Taking that 5-driver model and using that as a simple mental model, a framework that you can then synthesize a lot of data and make sense of it and you make it usable for you. Here's how it works. When you're listening to these calls, or maybe it's already happened, you're reading the transcript, all you're looking for is where are they talking about cash, profit, assets, growth, or people. Now, there's about 17% of you that haven't had a chance to listen to these calls, and there's some of you that have never even been through one of our programs. You might say to me, how do I know what they're talking about? If they're not using the term cash, for example, how do I know what's cash versus profit, et cetera? Well, the genius is my content team is they put a little definition. So even if you haven't been exposed to it, you have a little definition of what we mean by cash. Not only that, you got some terms that you can listen for, what I call trigger words. Listen for these types of terms, and that will absolutely help you in knowing when they're focused on cash, profit, asset growth, and people. Now, I know some of you in the group, if I had you to raise your hand, I don't know if we have reactions on this. I'm not seeing reactions, but how many of us are engineers? For all of you engineers, got to relax a little bit here. There's not an exact science on this. Meaning, if I'm sitting with a group of 20 people and we're reading DraftKings, we go through this exercise, we will not all have the exact same number of slash marks. That's not what the tool's meant to be. What you will find is that as a group, we will all have the top 2 or 3 towards the top. We may not even be the exact same order, but we do about 1,000 of these sessions a year, different companies, different industries. And what we find is it's just a simple way to synthesize which of the 5 drivers they focused on. With that information, you're going to answer 4 simple questions. That's what's on the other side. Which business drivers seem to get the most attention? I love the second part of this. And why? Who are they talking to? What's going around them? What's happening in the competitive landscape? The tax obligation that many states are putting in place around online betting. How's that impacting? So not just which are they focused on, but why are they focused on it? Second question, what were the 2 or 3 main points the executive was trying to make? What were their goals, objectives going forward? So kind of that forward looking. And because it's an earnings call, the last question is, What questions or concerns were raised by the analyst community? Now, I work with a lot of companies, and often you'll hear a leader say something like this: hey, just focus on the prepared remarks. Now, I get why they say it, and if you have limited time, that's absolutely a place to start. If you have more time, I absolutely recommend doing a review or at least synthesizing the questions around the analyst questions. Here's why. It's one thing for the company to communicate to the market what they're seeing, but when you hear the analysts ask questions, you get a feel, are they kind of buying into what's being communicated, or are they questioning what's communicated? The value to you with that is you get to see how's the market going to potentially take what we're communicating in these earnings calls. So it's a great resource. Well, folks, I don't have time. We got about a half hour left. I don't have time to go through this in great detail. What I do have is I have two quotes. One from Mr. Robbins. The other is going to be from their CFO as well. What I want to do is, using the chat box, as I read through it, I want you to type through as many of the drivers as you hear. By the way, you might hear them say, we increased our cash flow. Well, increase is going to be growth, and cash flow is going to be the cash driver. So you may have one sentence that will have multiple drivers being represented. So open your chat box. Here's my first quote coming from their CEO, Mr. Robbins. He says this: DraftKings set records for revenue and adjusted EBITDA, their key profit measure, in the second quarter as revenue growth accelerated to 37% year over year. Of the 5 drivers that are on the right-hand side, just type in the chat box. Which drivers are you seeing in there? Okay, profitability, absolutely. If you're not as familiar, this is earnings before interest, taxes, depreciation, amortization. This is DraftKings' key profit measure they communicate to the market. So definitely you're going to get profitability. Also, you're seeing growth, right? It says it right there. Growth or accelerate, all those are growth. So I'm definitely seeing profit and growth for sure. Some might say cash. That's okay. No problem. Here we go. We are pleased to be maintaining our fiscal year 2025 guidance with revenue. Where would revenue fit in the 5 drivers? Expected to be closer to the high end of our range as strong underlying momentum in the business and sport book friendly outcomes in the second quarter position us to absorb an exciting new state launch. That's a lot in there, a lot of words in there. What drivers? So growth, yeah, new state launch, that definitely growth. What else are you seeing? Revenue. I often look at revenue, could be cash or profitability. I tend to put revenue with profit because I'm looking at those 2 levers: increased revenue, reduced cost. Now, for sure, if I increase my revenue over time, it should drive cash. So in the end, it doesn't matter if we have the exact same number of slash marks. Well, let's jump to the quote from Mr. Ellingson, their CFO. He says this: as Jason mentioned, in the second quarter, we achieved company records in both revenue and adjusted EBITDA. What drivers put in my chat box? Revenue increased 37% year on year to $1.5 billion. We generated $301 million of adjusted EBITDA, representing 20% adjusted EBITDA margin. What is that margin? Margin, think profit when you hear margin. Sportbook net revenue, what would that be? Increased, what would that be? 45% year over year, which exceeded our expectations. I love that. We love to exceed expectations. Net revenue margins increased 230 basis points. What is that? Basis points. All you do, folks, put a little decimal point right there. For every 100, right there. For every 100 basis points, that's 1% improvement. So what they're saying is they're generating more revenue by 2.3%, a more net revenue margin. Also set a company record of 8.7%. That's that margin. So basically, if the 8.7 is the margin, you take 2.3 minus the 8.7, that would give you where they were before. About, what is that, 6.4 or so. Sportsbook handle increased 6%. So this is all the betting, sportbook handle, 6% year over year to approximately 11.5%, by $5 billion. Live betting handle increased 16% year over year. So what are you hearing? A lot of growth, a lot of profitability. You're starting to hear a little bit of asset. Yeah, the sport books, the live betting. These are different products or different options they have. These are all great examples. Well, folks, you can just scroll up and down the chat box. You can get a good feel for some of the drivers getting the most focus based upon what we just read in the two statements. Now, what I did is I went through and did more. Here's the whole thing, walking through the whole thing, right? Now, again, you might look and say, well, I got more here, I got more there, I got less, etc. It's not a matter that we get all the same numbers, but I can see themes. We definitely just look at the chat box. We're seeing themes around profitability. We're seeing some themes around here. Now, if you're using revenue and EBITDA impacting cash, that might be a little higher, but definitely we're seeing a lot of attention around both growth and profitability. So we've done the first part of it. Now, what do I do with that information? Here's what you do. You go through and answer the questions. That's what I've done. Now, folks, this is my perspective. If you have additional insights, you went through the process, please put them in the chat. But I'm going to take each one of these questions and kind of walk through what I saw, okay? So let's start. Which business drivers seem to get the most attention and why? For me, definitely growth and profitability. Why? Well, I just showed you right here as I went through that process. Now, why are they so focused on? Let's start with growth. Well, big part of executive communication from a growth and a profitability is the fact that they had a profitable quarter, which was huge for them. Big positive growth, profitability in this part in the first half of this year versus prior years of net losses, even positive cash flow, but negative on what they call free cash flow. I'll talk about that in just a moment. So some of the highlights. Executives highlighted record revenue of $1.5 billion, representing 37% year-on-year growth. This growth was driven by, so what caused this? Continued strong customer engagement. All the new products they're putting out, all the investments they're putting in, new acquisitions of states or new portions of their business, whether it's sports betting, whether it's gaming, the various opportunities they have available, they're seeing much more engagement and efficient acquisition. Specific growth metrics highlighted were the sportsbook net revenue increase of 45% and iGaming net revenue increasing 23%. Last thing I'd kind of hit is the launch in Missouri later this year. So they highlight the fact of the states that were coming on board. So the launch in Missouri later this year and monitoring a federally regulated prediction markets also drove discussion around future growth. Ricky kind of said growth and profitability being used to drive increase in technology advancements, which resulted in better customer retention and customer acquisition. I love that there. Well, let's talk about the profit side. What was highlighted there? Management emphasized setting a record adjusted EBITDA number, which was over 300 million and double the prior record, representing 20% adjusted EBITDA margin. So what is that? You take that core profit divided by their net revenue. For every $100 of net revenue, how much profit are they generating? 20% EBITDA. That's a pretty good EBITDA measure for them. In their slides, they highlighted, we set a record revenue, and they kind of highlighted Q2 of last year versus where they're at Q2 of this year. Prior record on the EBITDA number was 115 million. And we did 301. So great numbers there, very positive. Great question. Ash is asking, what do we mean by adjusted? So to be clear, when a company reports to the Security Exchange Commission, they have to use what we call GAAP accounting, generally accepted accounting principles. There's certain governing rules they have to use when they do those calculations. Now, every executive, let's say they had a one-off expense, some unique settlement or some big win that was a one-time event. What they'll do is they'll adjust the numbers to normalize them to kind of compare one year to another. So all adjusted is they're going into the numbers. They're saying, look, what was unique one year versus another? Let's try and clean it up so we can really compare apples to oranges. And so they'll take out any one-off type of opportunities, and they call that an adjusted metric. So adjusted EBITDA is them going in, they calculate their EBITDA, and any unique kind of one-off stuff, they'll clean that up, and it's kind of comparing their EBITDA in Q2 versus how they've used it in prior quarters. Ash, let me know if that answers your question. Great question. Well, let me jump back. They stated they are in early innings for their adjusted EBITDA growth. So not only did we have growth now, we hope to get even more growth and driving towards a long-term target of 30% adjusted EBITDA. Now, folks, that's a great number, 30% adjusted EBITDA. That's saying for every $100 they bring in net revenue, they're generating 30% on that. That's really good metrics for them. They're also highlighting maintaining fiscal year guidance. So they gave guidance. And remember, January, you give your guidance in February. And then we're now into halfway through the year. we're maintaining, but they're saying on the revenue side, so typically they'll give a range of where they're going to be. They're saying it's at the high end of their revenue, but kind of the midpoint on the EBITDA. Now, that's an important point. They're saying, we think I give you a range on my revenue. I think I can be to the high side, but my profit is going to be at the midpoint. What that tells me is their cost structure is still going to impact their ability to drive greater EBITDA margin. Why? Well, if I'm expanding to Missouri, I'm expanding new markets, it takes a lot of cost. So that's going to eat up some of our margins. It's a bit of, as they're building it out, think about a startup. You get up and running, and you got more going out. Once it gets up and running, you start getting efficiencies. Some of the challenges, though, they're facing is taxing of online gaming. That's starting to impact some of their margins as well. But that was highlighted from a profitability. So what are the 2 or 3 main points? Well, I'm gonna jump to the 3 main points. They actually, their CEO gave 5 points. And since I have a few of you on here from the course, you can come back and check this out. Here's what your CEO said specifically. There's 5 things he highlighted. First, we're in the early innings of our adjusted EBITDA growth. That was a message. He says, I got 5 things I want to make sure you understand. Here they are. Our second quarter adjusted EBITDA was over $300 million and doubled our prior records. This idea of we're outperforming, and guys, it's just the beginning. What else did they communicate? Third, sport outcomes tend to normalize over the long term, but typically benefit either the sports book or our customers in the short term. Fourth, we continue to monitor events surrounding federally regulated prediction markets and are actively exploring ways to enhance shareholder value. So the federal governments get more involved around taxation and how that's impacting them. Also, some of the other groups that they're looking to expand into, it's federally driven. And fifth, we continue to allocate capital to target the highest risk adjusted returns and maximize shareholder returns over the long run. So those are very specific to what Mr. Robbins communicated. If I was to summarize the whole call, here's what I kind of heard. Number one, acceleration of profitability and financial strength. DraftKings had a record quarter, and they expect to see even better performance as the year progresses. Product leadership and driving monetization. What do I mean by that? Well, a lot of new product innovations driving these opportunities, particularly around live betting. We're in the middle of a game, you can make bets. It was interesting. They talked about before pitch and before what type of play are they going to call in the NFL. I don't know exactly where they're at, but they were talking about live betting and very active in event betting, which was interesting. DraftKings structural sportsbook hold percentage increased by 100 basis points. So a lot about this idea, how do we've invested in a lot of products, we got leaders, how do we drive more monetization, creating more profitability and cash flow for the company? And future growth and efficiency levers, really focused on well-positioned around the NFL and NBA seasons. They're ready to go. That was highlighted. Actively pursuing long-term efficiencies, how we can reduce the cost of doing business. Stuff like AI, how that can lessen the amount of expenses we have around what we're doing as a company. So getting better around efficiencies, effectiveness, and how we do what we do at DraftKings. Well, what were the goals and objectives going forward? Number one goal is financial guidance. Maintain revenue guidance of that 6.2 billion to 6.2, expecting to be at that higher side, so towards that 6.4. Adjusted EBITDA, though, they're kind of that mid-level, about 850 million is where they're saying. So again, top end growth on the revenue, but the cost structure, we're still trying to figure that out. Various aspects that are impacted that. They also expect free cash flow approximately 750 million. That's the goals going forward. Sportsbook metrics expect sportsbook net revenue margin to exceed 7.5%. So that's going to go from 7% to 7.5%. Capital management, how they deploy their cash. Continue allocating capital to maximize shareholder returns. So if I'm working for the company and I got a project, how can I make the case that my projects will drive more cash flow and profitability for the business? Very focused on driving that for sure. And strategic expansion include anticipated mobile sportsbook launch in Missouri later this year, in guidance and continue monitoring federally regulated prediction markets to enhance shareholder value. So different opportunities there. Well, last thing. So what do the analysts say? Where do they kind of focus there? A lot of conversation around impact around tax increase, how that can impact, particularly around Illinois. Illinois went with a per transaction, per bet tax, and how they decided to roll that, kind of pass that cost along to the consumer. And there, Mr. Robbins was very clear. Don't know exactly how that's going to play out. Other companies said, no, you got to do a minimum bet. So you had to put in a certain amount to even play. They're kind of going, well, let's be consumer focused, recognizing there may be a little bit of a fee on that, see how they respond. So a lot of conversation around that. The predicted markets. Now these are markets that include like on reservations and different things like that, different groups that they're looking at there. And then structural improvements versus outcomes. Questions were raised about sustainability of structural hold acceleration and how recent tax increases might impact their numbers in next year. Well, folks, so what do we know now? Well, we know that it was a great quarter for them. It's first time profitability, great cash flow numbers, first half of the year really strong. So very positive from a performance there. Now, some of it's the activities they're doing. Some of it was good gaming kind of credentials, good opportunities in Q2 for them to expand their markets. So the question now is, well, what can we see in the numbers? How would I look at that? That's this last tool right here. And it's called the Navigating the Financial. For those that have been through the course, you'll be very familiar with it. As you look at this, on the left-hand side, you have the 5 drivers: cash, profit, asset growth, and people. Right next to it, you have the key metrics most companies will look at. Now, if I was doing DraftKings, maybe rather than doing the net margin, I might do an EBITDA margin. That might be a better metric for me. This tool here, though, can be used for any company. These are the most common metrics companies will look at. Now, folks, you don't have to be through a course to know what the key metrics are. They're right here. You don't have to be through our course and having reviewed financial statements, because guess what? It tells you where to go to find the numbers in the financial statements. Now, if there's any sort of calculation, it'll also give you how to calculate the numbers. So, folks, this is just a simple tool to help you assess that financial performance. Now, imagine you did that for Q2 of this year. Then you look at it and maybe compared it against Q2 of last year. Or you can do Q2 of this year and compare it to Q1 of this year to see sequentially what's going on. That's how the tool works. Well, you don't have the statements. I'm going to do a few with you, and then we'll wrap this up. I'll talk about how you apply this, and we'll be done for today. So let me just jump in here. We're going to look for cash and cash equivalent. That means I got to look for that line item in the statement. Now, the statement I need to go to, just so we're comfortable using the tool on this first one, based on my tool, what statement do I need to go to find the cash and cash flow? Just to make sure you understand my tool. If I want to find cash and cash equivalent based upon my tool, where am I going to head? What statement? Put in my chat box if you would. This would be the participatory part of our experience today. What statement is it saying? To get my cash flow, what statement is it telling me? Excuse me, to get, what am I saying? To get my cash and cash equivalents, thank you, Miguel. I said multiple things, so I may have confused people. For cash and cash equivalent, I'm going to the balance sheet. So let's go to the balance sheet. That's what I'm looking for. I jump over here. I'm looking at balance sheet. If I took my class, I know that on the balance sheet, things are listed by most liquid down to least liquid. In the chat box, how much cash and cash equivalent did DraftKings have on their balance sheet as of June 30th, 2025? What are you seeing? It's right here. How much do we see there? So this is in thousands. So right here, this can be 1,260,000,000. If I round it to millions, it'll be 62 million. So I throw that in there. You do the same thing. If you look at right here, cash from operations, I'm going to go to the cash flow statement right here. So I jump over the cash flow statement. I'm looking for net cash provided by operating activities. As you look at the screen, go about halfway down. Can you find for the first 6 months of 2025 how much cash flow was generated from DraftKings core operations? It's in thousands. So net cash provided by operating activities, the line item I'm looking for. It's right here. Oops. Wow. Sorry about that. Right here. This is the number. Now notice this. The prior year, for the first 6 months of last year, there were negative cash flow. Here they are, positive cash flow. Folks, high thumbs up. This is what we want to do. All the effort, all the development, we're starting to see positive cash flow. We're starting to see positive. Now, getting that consistent quarter over quarter, year over year is what they're really driving towards. Well, folks, you can continue this process. For profitability, I jump into total revenue. You'll see right here, I'm going to go to my income statement. I go to my income statement. I look right here. Total revenue for the quarter was this 1512507. I pull that over. Well, I keep running through those statements and I eventually get down to here and I've calculated my net profit margin, taking the net income number divided by my revenue number. What this tells me, this says for every $100 coming in net revenue, I generate $10.40 of profitability. Well, folks, here's the rest of the numbers. Now, I could then compare that to the prior quarter. Excuse me, this actually should say Q2. My apologies. This should say Q2. This is Q2 2025 versus Q2 2024. What do I notice? Well, this is huge right here. We're positive cash flow in the first 6 months of this year versus last year not being positive cash flow. Right here, if I look at my margins are improving. That's going to allow me to get more profitability if I'm getting 10.4 versus a 5.8. Now look at these growth on our revenue number. All the expansions, all that growth opportunity. Then you can run it on a half year number. You'd see even greater information. That's how you do it, folks. So not only can I see what they communicated, but I can now see how they're performing through their numbers. Well, the last stage of this is say, okay, I understand the company. I see how they're performing. Key focus definitely around growth and profitability. I understand what's happened. I looked at the numbers. Yes, they are the audited numbers. Yes, they should be run off of their Q. As I look at it right here, they may be the unaudited numbers. So I look at it right here because the numbers I'm sitting in front of me are the unaudited. So this was put together before we had the 10Q. I don't know why their 10Q is not having audited. Usually the Qs have an audited number. So Satish, I lied to you. The numbers that I have, I'm looking at the sheet from their 10K and it actually says unaudited under their numbers, which is very rare. Excuse me. The balance sheet is unaudited. No, it's all unaudited. So my apologies, Satish. These are unaudited numbers, but it's coming from their 10Q. It's what they submitted to the Q, which is surprising. I don't think I get that very often. So it's the numbers that they provided, if that makes sense. There you go. So let's go to apply. As we jump into the apply phase, what do we do with this? Folks, this is probably the most important part of any sort of business and financial acumen. To come and engage around this and not do anything, it's a waste of everybody's time. Well, here at Acumen Learning, we focus on this concept of business and financial acumen, help employees understand how their companies make money, how decisions are made around the money-making process. Now, years ago, we had a company that we were working with. They wanted to say, what is the value you can get from engaging, helping your employees understand business and financial acumen? And here's the outcomes that they found. The work that we did, what benefit did they get? A huge return on their investment, invested in this for their employees. But here's the outcomes. As you engage around listening to these calls, here's the types of things you'll get from it. 84% of employees that were engaging around understanding their company's financial metrics and how they impact it found that they improved their performance as a business or a function. 81% said it increased collaboration. The more you understand about your business and the key metrics, the more you're able to make a business case and work better internally with your team members. 77% said it improved upward communication. 77% also said it improved employee engagement. Once an employee understands what's going on, why it's going on, it'll absolutely increase their engagement. Well, 75% said it increased business focus and 84% improved teamwork. So investing in your team, understanding your business, these are the types of outcomes you get. Well, folks, that's the outcomes you'll get if you engage around it. So I've walked you through some tools. I have explained it. To know and not to do is not to know. So let me wrap up with how do I do something with it. The tool provides just simple 3-step process. The first thing is you're going to capture kind of key insights. I pulled one of their slides because these were the insights that they talked about. That's a great starting point. Then I summarize what I took away from it. Number one, profit and cash flow drives their future success. First quarter of profitability, positive cash flow, they're really excited about. Let's continue to get those. So what were some of the DraftKings is successfully leveraging improved sportbook monetization and organic user acquisition to achieve profitability faster. So again, I'm building all these products out. I got to get customers in. That costs a lot of money. How do I get it to profitability? Get that flywheel, big portion of what they talked about. Long-term strategy heavily relies on margin expansion, get more profitability, and how we can do that both from a top line as well as a cost control perspective. And then finally, the idea of these new state acquisitions, we continue to expand. That's an opportunity for us. So what would I do? The next step is, okay, I've listened to it. What would I do? I put the mindset, let's imagine I'm a product manager at DraftKings. What are some of the things I should be thinking about based upon my call? Now, I'm not a product manager. I don't know all the ins and outs, but here's some things that stood out to me. Number one, this idea of enhanced live and in-game betting. That was a key focus. So focus on improving in-game features, speed, personalization, micro bets. Why? The in-game handle grew 16%. That's an opportunity. So if I have any connection to that, I need to be looking at that. Scale AI from an efficiency perspective. A big part of their ability to drive profitability is how they're managing costs. So think about how AI can automate some of the operations that are needed to drive our products. And then optimizing our high margin user behavior, build retention features for profitable users, parlays, social bets, etc. As could be a focus. Well, that's what I would do if I was a product manager. I'm not a product manager, so as a consultant, here's what I'm going to do. I'm looking at their performance against some of their competitors. Where are they success? They talk about industry leading availability, uptimes, huge, 90+%. Go see what others are getting. What are they doing different? Can I learn from that? I would share this information with my consultants and clients. What do I know about this industry? What do I see happening? The last part is, if you're at DraftKings and we can be helpful, we'd love to come. We'd love to share how helping your employees understand your business will absolutely build their credibility. It'll build their career. That being said, it'll also build your company. The more people understand this business, the better off they're going to be. Well, folks, that's the last phase. You take that information and have a conversation with your manager. The last step of the process is, once you've got these, sit down with your manager, share what you've learned. You'll absolutely build your credibility, career, and company. So as you wrap up today, remember that first step in the prepare phase, or the second step in prepare phase, which is to review your notes. Once you've done this once, just go back to the notes. What did they say? You've got it now. You got the video. You can review this and then go listen to the call and see what they say actually happen. So as you wrap up, and our team put in the chat box the tools, the resources, etc. Here's my question to you. Who are you going to analyze? You come, we spend an hour. Who are you going to take this information? The company you work for, sell to, compete against, partner with, invest in, interested in, or next month we've got Allstate, insurance company. So we're going from online betting to insurance. That's our company next month. October 29th, go register for that. Love to have you. Bring colleagues, friends, peers. Let's help build the business acumen of your organization. Now, folks, if we can be helpful, I'd love to talk to you. Reach out to us. We've got $100 off on our self-paced online. If you're saying, look, I don't know this stuff, I would absolutely recommend go engage in that course, then jump on the next call, and it'll absolutely start to build your comfortability around this information. Folks, it's been my pleasure to spend some time. I'll stay on for any additional questions. Thank you very much, and have a great day. Great comments, Ricky, Satish, thank you. Deepak, thank you. James, thank you. All these great participants. Thanks for engaging with us today. Miguel, I'll use my number one trading, my most often disclaimer. Don't use any of my information I share with you to impact your portfolio. I'm not a financial planner. I'll let you decide what you want to do. There you go. Well, folks, we're on the call. If there's any other questions, happy to walk through. Otherwise, make sure you download the tool. Looks like we've got a question. Are most of the analysts on the call sell side, or is there a split between buy and sell side? Both. You get both. Often an analyst will, basically, it's more like you're tracking the stock. You become an expert, for example, in online gaming. And so you're tracking buy, sell, hold. They may have a team that's working with them, but in the end, the analysts that are on there are really focused. I don't know if I get clarity like which side they're on. It's more around they're tracking, then they will write those reports, which they then recommend buy, sell, hold. Uh, so I don't know that I've ever got real clarity around that, Jack. From my experience, like I do a lot in the oil and gas, technology sector, healthcare, they're the same people and they write a full report providing insights on both sides of that discussion. Let me know if that answers your question. I don't know if anybody on my team has any other insights on that. I don't know that I've got specifics on that. Well, folks, it's truly been our pleasure. If there's no other questions, thank you so much and have a great day. We'll see you. Thank you.